Doing well today. It's Wednesday, the 17th of November. This will be my last update for the rest of this week and next week. Next week's Thanksgiving week. I'll be out of town. I'm going to be traveling, so no updates after today for next week and 2 days. So just to let you know what's going on there, so you don't wonder where I went or where I've been. Um, Next week, by the way, just as a case in point, it's Thanksgiving week. Things typically start to slow down. Monday, Tuesday, probably okay to trade, although volume typically will be a little bit lighter. So you got to make that personal choice, personal decision. Do you just hang it up after this week, take a full week off, come back the following week, and then after Thanksgiving, we'll have about 2 weeks until we start getting into the Christmas, New Year slowdown. Doesn't mean that there aren't opportunities, but when you have volume falling off, you have a tendency for any movement that happens to be a little bit more, I don't want to say violent, but yeah, violent. It has a tendency to be more drastic. You have these drastic whips up and down or whatever it might be. Doesn't mean it will happen, just means it could potentially happen because you've got lighter volume and understanding how market works. When you've got fewer pending orders, one large market order consumes those pending orders, which can drive price up, drive price down. It can cause it to happen rapidly, as opposed to when you've got higher levels of volume in the market, things are, it balances those out, so you get kind of smoother moves. Although during regular market hours, you have higher volatility, you do see more opportunity for movement, but even then it's tempered by that larger number of pending orders, which helps normalize the market. So anyway, you get what I'm saying. You have to make a decision on Friday, or maybe you do it today, I don't know, if you want to continue trading for the rest of the week, next week, or not. So think that through. Definitely think through what it means to your trading, where you are currently, so on and so forth. All right. That said, let's pop over here. Had some news this morning, and we have some additional stuff coming up. There's a teleconference, I think it is, right? Federal Reserve Roundtable is happening over here a little bit later today. It's just listed as yellow because of who's speaking, but there could be potentially some sound bites that come out of this. I don't foresee anything that would really spook the market, but you never know. I mean, that's the thing with people speaking live, is you don't know what's going to happen and what's going to come out of their mouth. So, but it is listed as yellow. That means that there's not a high impact foreseen or forecasted on that. But do take it with a grain of salt. If we get in, this is actually after my trading day anyway. But if you're trading later in the day and you start to see movement, just keep in mind it might be something headline driven or soundbite driven. So just be aware of that. Okay. Over on charts, what are we looking at for the day? Same thing we look at every day, because all we talk about here is the BTX method, which is that super simple trading process that helps you get on that path to profitability. Are there other ways to trade? Absolutely. But this one gives you quantifiable means of doing what you're doing and helps you create that consistency. And as we've already shown you, time and time again, if you're looking for consistency, this will get you where you want to be. I'm just going to flash this up here really quickly. Yesterday, we did have a big move here on the S&P that we're able to take advantage of. Market pulled back, made lower highs, lower lows, gave us the indication saying, hey guys, if we start to break back out here, you might want to be part of it, right? And sure enough, lower high, lower low, park a potential buy order up here at the top of that. And we can see the market did snap back into its current market bias, which is long, and was able to ride that up for a pretty nice potential return there. And I always say potential because I don't know what you're doing or not doing, or if you're following the method. So anyway, here we are, wrapping up so far this year, after yesterday, on our model portfolio, where we track every day the trades that we take or potentially take utilizing this trading method. we can see, performance throughout the year, and we're sitting at 83%, just trading a few times each month on each instrument. So looking pretty good. That's consistency for you. As you can see, you do not win every month. You don't win every day. You don't win every trade. In fact, you lose more trades than you win. That's part of trading, guys. If you have good money management, you can do that. You don't have to have an 80% win rate to be profitable. As a matter of fact, I'm going down a rabbit hole, tangent, whatever it might be. Keep in mind, strategies that have 80% win rates typically are taking very small wins. They're taking those pieces when the market moves in your favor, you're just taking it off, taking it off, taking it off. Nothing wrong with that. You've got to have a strategy to manage risk, but typically in those systems, your average winner does not outweigh your average loser. So you have to have a high win percentage in order to be profitable. The flip side of that is if you're using a win percentage that's 2 to 1, so your reward is 2 times your initial risk, 2.5 times, 3 times, 1.5 times even, but 2 times especially, you can have a win rate down into the high 30% and still be profitable. So take that for what it is. You don't be so focused on winning every trade. Be focused on the process and be focused on, are you giving yourself the chance for that long-term profitability? Let go of what happens at the last trade, this trade, the next 5 trades. You have to look at things in that big bucket of trades, right? 75, 100 trades, 150 trades. That's where your edge comes in. Just like if you're at a casino and you're playing, let's say, roulette, you've got a wheel spinning and you're just betting red or black. People seem to think that because red has hit a certain number of times, black is due to hit, right? It's not. It's the same odds every time the wheel spins. And, it could come up black 25 times in a row. Might be highly unlikely, but it could happen. It's the same thing with trading. You can't look at the last couple of trades. You've got to look at the overall percentage, which is why it's so important to have a consistent method that gives you quantifiable reasons for doing what you're doing. Anyway, going down a rabbit hole or on a tangent. I don't know. I have a friend that says she hates when I say rabbit hole. I don't know. Anyway, I'm definitely off what I should be talking about. So let's just wrap this up real quickly. We're going to talk about what our potential opportunities are in the market today, and then we'll get out of here and you guys get on with your day. And I'll get on with my holiday after this. All right. So let's go back to this screen right here. S&P, we had a nice move yesterday. We just talked about. It's pulled back off of that over the course of yesterday afternoon and through off trading hours. We're kind of flat right here in a little bit of a channel, and now we're waiting to see what the market's going to do as we get into live trading hours, regular trading hours here shortly. The market, the bias is long, 4 hours long, 30 minutes long. We'd like to see this pull back maybe a little bit more here. It's pulled back coming into the new market session. I'd like to see it pull back a little bit more. Again, I think I've mentioned this previously. I don't trade the first bar on the S&P. I wait. I wait an hour and let that opening chop get out of the way, and then everything you see here is going to be later in the day. This doesn't even turn on until 9:30 my time. I'm Central Time. TradingView set up to show me Central Time. Right now it's 8:30. If you look at these bars down here, it's currently coming into the 8:30 bar, right? So anyway, for what that's worth, we're looking for long trading opportunities. We'd like to see the market pull back, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then we'll play it when it breaks back in the direction of that current market bias. If it keeps floating down, then we don't trade it. It's just that easy. Over here on crude, we're looking for a short bias. Crude has kind of rolled over on us, hit that high around, 84, 85-ish. And right at 85, and now it's rolling over. Crude, we're looking for shorts, 4 hours short, 30 minutes short. We'd like to see this push higher, and then as it falls and breaks back in the direction of its market bias, we'll take it. If it just chops around here and doesn't do anything, we don't take a trade. If it starts pushing up and just keeps running, we don't take a trade. You've got to wait for the process. It doesn't do you any good to have a process if you don't use it, right? Gold, we're in a mixed bias technically right now. If this pushes back down, it's going to cause our bias to be mixed for sure. So right now, you know, we've got the 4-hour bias is long, 30-minute bias is short. As this candle closes, though, it may pull it over. We need to see it float back down though before we can take a trade. So gold's going to be an iffy one for the day. We may just have to sit on our hands here as well. But wait until you see what the confirmed bias is on that 30-minute. If it pushes up, it's a long bias, but it would have to go a little ways before it pulled back. It may be one of those days where we just don't have any trading opportunities there. So anyway, that's it. I'm going to leave it here. Let you guys get back to your trading days. As I said, I'm going to trade, watch things today, but then I won't be doing any videos tomorrow, Friday, or all of next week. I'll be out. All right, so that's it for now.